So you're thinking about buying a home. That's huge. And we're about to tackle the one part that most people think of as the last boring hurdle, financing. But what if I told you that getting your mortgage figured out first isn't a chore? It's actually your secret weapon. Let's get into it. You know how it is. You're scrolling, maybe driving around on a Sunday, and then boom, you see it. The one. It's got the perfect yard, the dream kitchen, and it's so easy to get completely swept up in that feeling. But before you start imagining where your couch is going to go, you've got to hit the brakes just for a second. Because believe it or not, the most important decision you're going to make isn't about the house itself. It's about how you're going to pay for it. I know, it sounds way less romantic, but getting the loan right changes the entire game. Yup, you heard me, a power move. See, choosing your loan isn't just a bunch of paperwork. When you get your financing lined up before you even think about making an offer, you're putting yourself in the driver's seat. You stop being just another person looking at houses and become a serious, prepared buyer that sellers will actually pay attention to. And think about it, your mortgage has this massive ripple effect. It literally dictates how much cash you need upfront for a down payment, and what your monthly budget is going to look like for years to come. But just as important, it defines how strong your offer looks to a seller. Some loans even have stricter inspection rules, which can make or break your deal in a hot market. All right, so what are your options? The best way to think about them is like a toolkit. You wouldn't use a hammer to saw a board, right? Each loan is a different tool for a different job, and picking the right one is all about your specific situation. So let's open up that toolkit and see what we're working with. Okay, first up are the two heavy hitters, conventional and FHA loans. A conventional loan is awesome if you have solid credit and have saved up a good down payment. But if you're maybe a first-time buyer or your credit is a work in progress, an FHA loan is fantastic. It can get you in the door with as little as 3.5% down. The big thing to watch here? That last line, the mortgage insurance. They both have it, but it works a little differently. So what is this PMI thing we just mentioned? It stands for Private Mortgage Insurance. And here's the deal. If you go with a conventional loan, but you put down less than 20%, you're going to have this extra fee tacked on to your monthly payment. And let's be super clear, this insurance doesn't protect you, it protects the lender. So you have to factor that cost into your monthly budget. It's a big deal. Now, for the next tool in our toolkit, I just want you to look at this number, 0%. What on earth could that be for? That's right, a 0% down payment. This is the incredible power of a VA loan, and it's an amazing benefit for eligible veterans and service members. Not only can you often buy a home with literally no money down, but you also get to skip that PMI we just talked about completely. It's a game changer. Just keep in mind the house itself has to meet certain standards to qualify for the loan. But what if you don't really fit into any of those standard boxes? Maybe you're self-employed with income that goes up and down, or you're trying to buy an investment property. That's where non-conventional, or what we call portfolio loans, come into play. They're built for those unique situations where you need a little more flexibility than the big traditional loans can offer. Okay, so you've got an idea of what type of loan might work for you. Now what? How do you actually get one? The whole approval process can seem like this big, mysterious black box, but I promise you, it's not. It's really just a very clear checklist. This is it. This is exactly what lenders are going to look at. They'll need to see your income, to make sure you can afford the payments. They'll verify your assets, like your savings account, to see your down payment. They'll look at your job history to make sure it's stable. Of course, they'll pull your credit report. And then, once you found a house, they'll order an appraisal to make sure the property is actually worth what you're borrowing. And honestly, here's the best advice anyone can give you for this stage. Preparation is everything. Seriously. Get your documents together before you even start talking to lenders. If you have your pay stubs, bank statements, and tax returns all ready to go, the whole process is going to be so much faster and a whole lot less stressful. And now we bring it all full circle. You've done the homework, you've picked your loan, so how does that help you actually get the house you want? This is where all that financial prep work turns into a real competitive advantage. See, a seller isn't just looking at the offer price. They're looking at how likely it is that the deal will actually close without any drama. A solid pre-approval with a conventional loan, for example, might look a lot safer to them than an FHA offer that could get held up by required repairs. Your loan choice sends a signal about how quickly you can close and how solid you are as a buyer. It can really make your offer pop. And if there's one thing you take away from all this, let it be this. Smart buyers, the ones who win, figure out their financing strategy before they write an offer, not after.
It means you walk into a negotiation with total confidence, knowing exactly what you can do and knowing your offer is built on a rock-solid foundation.
So, as you get ready to jump into the market, that's the real question you should be asking yourself. It's not just about finding the perfect house. It's about building an offer that's designed to win. And that all starts with choosing the right loan.